And thank you all for joining us. We're just starting our program. My apologies for getting us underway a little bit behind time. I know many of you are still just coming in through the Zoom network. I'll provide a preamble and we'll we've got a pretty good turnout. I know some of them are just slowly making their way into the Zoom account here. So as they do that, I want to provide official welcome on behalf of the Chamber of Commerce. My name is Dan Rogers. I'm the Executive Director here at the Kelowna Chamber. Pleased to have you with us and great to have a couple of dynamic guest speakers that I'll more formally introduce in just a moment. Thanks all for joining us. Our continuing monthly speaker series brought to you by the Okanagan School of Business. Pleased to have the Dean, Bill Gillett, joining us today. Also, our guest speaker is Brendon, Ogmundson, the Chief Economist of the BC Real Estate Association, and Kim Heinzman, the President of the Association of Interior Realtors, the newly merged and branded local association of realtors. Great to have Kim with us. They'll be more formally introduced just in a few moments to bring us the insights that they have into the current market conditions and maybe forecast a little bit what they think about for down the road. Also pleased to have with us the Dean of the School of Business. Before getting too much further along, though, I do want to acknowledge that at least for those of us in Kelowna, we have gathered today on the unceded territory of the Sayilks Okanagan people, and we thank them for their rich history and culture. Some housekeeping items off the top. I'm assuming many of you are now, after a year of the pandemic, almost a year or so, used to the platform that we have today with Zoom. You can pose questions at any time. Just to look at the Q&A function at the bottom of your screen. You can use that. I'll also monitor the chat function if you have a question you want to pose that way. Feel free to do that. I'll monitor that when we get into the question and answer session. We have about an hour with our guest speakers. We want to keep this over your lunchtime and good conversation. So make sure you get those in as early as you can. A couple of other items to note that along with many chambers of commerce throughout the Okanagan Valley, we formed a COVID response coalition under the Okanagan We've Got This banner. You can find out more information and resources to help your organization and business respond to the challenges. And also we celebrate some of the success stories about resilience in our region in light of managing the challenges around COVID-19. You can check that out either on the main site, OkanaganWe'veGotThis.com, or even check us out on Facebook. We love to hear your stories of resilience in responding to COVID-19. Also want to acknowledge one of the things we're doing here at the Chamber in partnership with the BC Chamber Network is providing a workshop seminar series, several cohorts to help small businesses manage themselves in the short term and in the long term in response to COVID-19. The Building Resilience to Thrive online training program is continuing. The final of 3 cohorts is set for February 24th, March 31st. It's not an onerous investment in your time, only for an hour, once a week. It's a certified program. If you or someone from your team wants to participate, it's a great way to learn a bit more about how to shift your business models, re-engage your customers, and adjust your workplace culture. Is delivered from some of our friends at Gustafson School of Business at U of X. So if you want to find more information on that, just contact the Chamber office. Want to acknowledge, as we usually do, our foundational partners here at the Kelowna Chamber, our President's Circle members, including UBC Okanagan, MMP LLP, Interior Savings, and our newest foundational partner, Rogers for Business. Extremely pleased to have Rogers Communication joining us as one of our foundational partners. We look forward to growing and building our relationship with them as they continue to grow their presence in the Okanagan, centered on providing technology and resources that can support and accelerate the pace of business in Kelowna and throughout the Okanagan. Also, acknowledgement to our affinity partner, Chamber of Commerce Group Insurance Plan. If you want to look how you can build your program with your employees with the #1 extended healthcare program in the country, give us a call or contact TD Benefits and we'll be pleased to have a discussion with you. At this time, I want to turn things over. Welcome all of our guests that have joined us today. And at this time, I want to turn things over to Bill Gillett, who's going to provide greetings on behalf of Okanagan School of Business. Bill.
Thank you, Dan, and welcome from the Okanagan School of Business to all of our participants today, and thank you to our panelists. The school is once again comfortably into our winter term, albeit mostly online, although we are happy to see that the new health sciences building has come online in terms of being used, particularly in lab space for our training for health, frontline health workers. Also, on Saturday, we had a virtual commencement of particular interest today because we now have a number of new graduates who will be looking to move into or up in the Okanagan real estate market. So those who are participating, I'm sure, are looking forward to what we have to say today. So thank you again and welcome.
Dan, you're on mute.
Oh yeah, see, it must be January. Thanks, Kim. I was on mute and that was the best thing I had to say, acknowledging Bill for his wisdom, his charm, his good looks. So I won't repeat myself, Bill, but thank you for that. And I do want to acknowledge Okanagan School of Business for their continued support of the speaker series. We are hoping soon we'll be back with a live event, but we continue to provide this online. We also can't do this without our individual sponsors, and today's sponsor for this session on What's Up with Okanagan Real Estate is Touchstone Law Group, and we're pleased to have with us today Jane Otterstrom to provide greetings on behalf of Touchstone Law. So Jane, over to you.
Awesome, thanks Dan, and thanks everyone for joining us today. I have the pleasure of introducing our speakers, but first a little bit about Touchstone Law Group. So we're a boutique solicitor firm here in downtown Kelowna. We practice in areas of residential and commercial real estate, private and commercial lending and borrowing, as well as real estate development. And we also practice corporate and commercial law, as well as estate planning and estate administration. So we're pleased to welcome Brendon and Kim as our speakers today. Brendon Ogmundson. Brendon specializes in macroeconomic forecasting and housing market analysis. Brendon is responsible for producing forecasts for the BC, Canadian, and US economy, and for authoring quarterly forecasts for the BC housing market and Canadian mortgage rates. He's also a member of the BC Economic Forecast Council and the Philadelphia Federal Reserve's Survey of Professional Forecasters. Brendon holds an MA in economics from Simon Fraser University and is a CFA charter holder. We're also welcoming Kim Heisman. So Vernon Realtor Kim Heisman was elected in April 2020 to head up the Association of Interior Realtors, formerly the Okanagan Mainland Real Estate Board of Directors. Heisman is a licensed realtor and associate broker in Vernon and leads a board of 10 realtors. Heisman has more than 13 years of industry experience and has served as board member since 2015 and on various committees and task forces.
Great, thanks very much, Jane. And Kim, you're going to start us off today, right? So I'll turn things over to Kim.
Start us off. You bet. Thank you very much for having me and welcome everybody to the webinar. So I'm going to talk about 2020 and it being a very unusual year, to say the least, and it doesn't change in the real estate market as well. So it definitely was unusual. Normally we would see a typical season of, changes in any given year of a really busy spring and summer months, and yet we slow down in the winter, which even in 2020, that did not happen. It wasn't a normal year. The unit sales were up 19% and average prices were up 15% for the year. And we also saw a record high for total residential dollar volume at $5.9 billion. That shattered 2016's numbers at 4.7 billion. So much of the increase was due to really strong buyer demand in the area, flooding into the market, and very constrained supply. We continued to struggle with inventory, and due to that, that's what caused that differentiation in the demand. So buyers were looking to refuge from the pandemic. It led them towards buying more single-family homes, which also contributed to the higher share of sales this past year. And the highest product that was sold was a single family home, even though condos and townhouses were fine, but the single family home really showed the numbers that's where everybody was looking for space. So the desire for living space, lifestyle changes, the ability to work from home, it all seemed to be strong factors. Our homes have turned into our gyms, our schools, our offices. It's become that one-stop shop. So we saw a lot of people focusing in on those items when they were looking at homes of either moving into the area or the buyers and sellers in our area needing to adjust the home that they were in due to the pandemic. We also saw the demand throughout the year was so high, and the inventory never really had a chance to catch up. We have not been able to put the inventory back into the market, and we're going into 2021 with still a demand on inventory. So the buyers that are coming to the Okanagan are focusing on improving their quality of life, and they have transitioned to a work-home lifestyle. They also want to, we've heard from several people that they want to escape the density populated cities, and they're reassessing their wants and needs. This is possibly accelerating their future plans as well. There's some people that might have thought they might want to come up into the Okanagan about 3-4 years from now or 5 years from now, and now all of a sudden that's accelerated, and they're like, I can work from home. I'm going to go and live where I want to live now. Some of the that already live here, they're just looking to change their space, right? The benchmark price for single family homes in the Central Okanagan, North Okanagan, and the Revelstoke Shuswap area have all saw double-digit increases, the double-digit percentage increases that when we look at year-over-year comparisons. And Brendon's going to get into those details a little bit further down the road. But the highest category being the single family homes, once again, because everybody's changed that lifestyle and what they're looking for space. And that was approximately 12% across the board in all the different areas of our association. The Central Okanagan region, which the benchmark price for single family homes is $746,800. Benchmark price is different from average price, and that is a whole other conversation that we can have on a different day. But benchmark price literally is comparing a specific product to a specific product and then coming out with that instead of average being everything and then figuring out the average. So if we look at the specific area like Upper Mission, the benchmark price was closer to $1 million. So if you actually break down the areas of the Central Okanagan, those are going to be way more detailed, and the benchmark price will change in different areas in different neighborhoods. And that was $998,000 is the benchmark price in the Upper Mission. But when you look at the city of Vernon, for example, the benchmark price is $390,000. So very, very different. And so buyers can get way more bang for their buck outside the Central Okanagan. And that's also pushing sales up in those remote areas. Coldstream, which is a little suburb off of Vernon, saw a 466 increase in sales just in December. It was just unbelievable what happened there. So the shortage of supply continues to be the upward pressure on the pricing. The buyer demand has not changed at all. And if this trend continues, I don't see the market changing anytime soon. Although being an association, we can't really predict it. And that's really Brendon's job to give us a little bit of a prediction. So I'll hand it over to Brendon now.
Well, Kim, thanks very much. And I think we're eager to hear Brendon and get into a bit of a discussion. You know, what's short term, what's long term? I think that's the big question. What's influencing on the short term? You know, we have a demographic shift that's occurring in this country, a lot of things at play here. And we're really pleased to have Brendon with us to help us through this, the chief economist from the BC Real Estate Association. Brendon, I'm going to turn things over to you, and thanks, Kim, for providing an overview.
Thank you. Thank you to the Kelowna Chamber for the invite to speak, and thank you to Kim for an excellent intro to a lot of things I'm going to be talking about and really building on a lot of the themes that she already brought up. Okay, so I'll be presenting kind of our economic outlook for the province and our outlook for the housing market as a whole, with some focus on the Okanagan. And really concentrating kind of the back half of the presentation on reasons why we're really optimistic about 2021. Obviously, it's a low bar to sort of exceed 2020, but I think regardless, there are some very good reasons to be very optimistic for this year. We'll start with a look back on the economy in 2020. This is something that we call our nowcast, or what's called a nowcast rather than a forecast. It's just, instead of kind of looking to the future about what's happening in the economy, we're trying to measure how the economy is progressing in as close to real time as possible. If you're really into this kind of thing, you can find it on our website. We publish it every month, or you can have it delivered to your inbox. But it's a really good tool just to track the recovery in the economy. You can see how severe the injury to the BC economy was in 2020. With real GDP growth estimated to have contracted in May and April and May at about a 10-11% year-over-year rate. We are seeing kind of an estimated positive growth. We've been kind of into a recovery since the spring and summer. We're estimating that we're going to maybe sneak into positive growth territory just to finish 2020. The way this is constructed, it takes all of the data that's released from the province within a month and rolls it into one number. So there's a bit of a lag, but we are expecting to see positive growth to end the year, and that'll be a handoff to really strong growth, we think, into 2021. So we're into an economic recovery, but that recovery is going to be a little asymmetric. You may hear economists throw around terms. We talk about recessions and recoveries, things like a V-shaped recovery or an L-shaped recovery. This time around, I think the most commonly heard term is a K-shaped recovery. And this chart, I think, really illustrates that concept, where we have some sectors like residential real estate that are experiencing a very traditional V-shaped recovery, a sharp retraction that quickly recovered. And then things like tourism that have essentially fallen to zero and are going to take a lot longer to get back to normal. So we have these sort of some sectors recovering, some are going to take a lot longer, really lagging behind, gives you kind of that K shape. Not only that, but recovery for some sectors and for much of the economy as a whole is not going to be a smooth path. And we're seeing that in the first quarter, probably for Canada as well, where a lot of the extra COVID restrictions we're seeing back east are going to slow growth in the first quarter. But as I'm kind of a microcosm of that, we look at the restaurant sector, which through the summer looked like things were starting to get back to normal maybe. They've been essentially closed for several months, and we started to see reservations start to pick up in the summer, and then right back to zero as the second wave hit. So there's going to be these sort of false starts, a bit of a choppy recovery. That's what we're going to see in the overall economy as well. Looking at employment and comparing employment in BC during this recession to past recessions in Canada, 81, 90, 2008. It's pretty incredible just to see the scale and the speed and scope of this recession, of the pandemic-driven recession versus other, very serious recessions. 81 went on for a long time. Everyone kind of remembers the financial crisis and how kind of perilous that felt. And this time around, we lost about 15% of employment in about a month and a half. So it really kind of an incredible gut-wrenching speed of this recession. Fortunately, we as the economies reopen, we're starting to recover. We're back to about 98% of where we were pre-pandemic, but still, it doesn't sound like a lot, 2% left to go, but that's a lot of people still out of work. and it's going to be a little slower, I think, getting back to those pre-pandemic levels of employment. So just as a summary for those slides, clearly, the BC economy was in maybe its worst recession of all time. We'd have to go back to 81, 82, I think 82, where the economy contracted about 6.5%. But clearly the depths of this recession, but not its length, may be the worst that we've seen, at least that's on record. But if you're watching the BC housing market, it'd be pretty tough to see a recession at all. So this time the housing market just sort of stiff-armed the recession, much like Marshawn Lynch in one of my favorite plays of all time as a diehard Seahawks fan, but really just didn't feel this recession at all. We look at the recovery of home sales across all of BC. It wasn't just one market, and we kind of highlight the Okanagan here, but really across every single region of the province, we saw home sales not just come back to where they were pre-pandemic, but 60, sometimes 80% above where we were pre-pandemic. So an incredible rebound in sales. So we'll get into what explains a lot of that kind of really remarkable and like Kim was saying, really unusual recovery. This is at a time when unemployment was around 13%. Usually when we have a severe recession, let alone a pandemic, we see sales falling. So we get a negative demand shock. This time around, we saw the exact opposite. One of the many reasons why this recession is so unusual compared to the past. One of the main factors, at least early on, driving that remarkable rebound in sales was just pent-up demand. So after the initial part of the crisis was over, we didn't have a spring selling season. Sales were in the Okanagan were about 900 sales lower than they normally are during those months, but we quickly recovered those sales. So through June through December, sales were almost 3,200 sales higher than they normally are during those months of the year. So some of that pent-up demand clearly leaked into other months, but there's more going on as well. One of those factors is again a really unusual and asymmetric impacts on employment from the pandemic. So normally in a recession, we see pretty normal, kind of uniform job losses across sectors and across wage tiers. If we kind of bust out employment to high wage, medium wage, and low wage, normally it's actually high wage and mid-wage jobs that are affected most by recessions. This time around, clearly it was low wage, especially younger frontline service sector jobs that really felt the brunt of this recession. While high wage jobs actually ended the year 6% higher than they were pre-pandemic. So if you were in one of these high wage jobs, it's very likely that you not only you didn't lose your job, maybe you're just doing it differently, doing it from home, doing it, splitting time between home and the office, but you didn't lose your job the way that we saw job losses across other parts of the economy, especially in lower wage frontline service sector jobs, which is also why there's sort of that disconnect right now between the ownership market and the rental market, because a lot of those jobs that support the rental market are still are still quite depressed, whereas jobs that support ownership market have actually grown. The other, I think, the major factor driving the recovery is the fact that policymakers learned a lot of lessons from the previous crisis. So from the financial crisis, the chief lesson learned being that you need to respond to a crisis with overwhelming force and speed. So the Bank of Canada lowered its overnight rate to its effective lower bound of 0.25% very quickly, and used its ability to expand its balance sheet in order to really inject a lot of liquidity into credit markets all across Canada, all across sort of credit markets in Canada, whether that's mortgage-backed securities. We saw them buying provincial bonds and, of course, buying Government of Canada bonds. And it's especially that last category, all of the purchasing. You may have heard of quantitative easing, essentially swapping reserves on central bank reserves for Government of Canada bonds. That really drives interest rates on Government of Canada bonds down. Those rates tend to be a benchmark for rates all across the economy, and therefore we've seen mortgage rates fall to record lows. By the end of 2020, we were at 1.8%, about 70 basis points lower than their previous historical low. So we would estimate that the impact of that extra sort of liquidity injected into markets to really push mortgage rates even lower than they've been before, probably was responsible for maybe half of the overall recovery. Just running some quick kind of simulations about, a baseline where mortgage rates, what if mortgage rates would only fall into 2.5%, their previous record low, versus falling to 1.8. We find that just that extra 70 basis points probably accounted for something like 1,700 sales a month. So not explaining the entire recovery, that blue line in this chart, but really explaining a lot of their overall strength in the recovery in home sales. So that's the demand side. Pent-up demand, really unusual impacts on the labor market, and we're actually seeing the types of jobs that support ownership housing grow in a recession. And then, of course, all of the monetary stimulus poured into markets really help explain why we're getting these really unusual impacts on demand despite being in a recession. What about the supply side? So again, really unusual things happening. This is for the whole province. Normally, when we see a big spike in the unemployment rate, you get people, households being forced to list their homes, they lose their jobs, they experience a loss in income. We see listings really start to flood onto the market, and that's where you really get potential for prices to be depressed because you have sellers that really need to sell. So back in 2008, 2009, we saw this pileup of inventory occur during that recession. If we just run a shock to unemployment or to the economy in typical kind of econometric models, they give you the same outcome. That orange line shows what our models tell us should happen in a recession. We should get especially one this severe, we should get a big spike in listings, in supply. Instead, what we got, we thought this might be the case a little bit, was because of social distancing, listings actually fell for the first few months of the recession, which is kind of what we thought would happen. It's what we simulated in our low supply response. But then instead of kind of returning to normal recession dynamics, it just kept falling. So listings more or less plateaued at a very low level through the summer. And then as demand really ramped up, that inventory just kept falling and falling as we just listings couldn't replace fast enough given the pace of sales in the market. So what we ended up with was ending the year in many markets at historical lows in terms of total listings on the market. One reason why I think initially listings were so low is because of the CMHC's deferral program. Under this program, you could defer your mortgage payments for, I think, up to 6 months. That program was set to end for most borrowers in October, November. So there was this worry. You probably heard a lot about it in the press about a deferral cliff, where once those programs ended, households would still be in pretty bad financial shape. The economy hadn't recovered, and then we would get this a real impact on arrears, so mortgage defaults, or a flood of listings in the market from desperate sellers. This is really what was driving a lot of the CMHC forecasts. So when you heard a lot about their forecast, or prices were going to fall 9 to 20% or something, I think a lot of it was built or kind of predicated on a lot of new supply hitting the market, and especially without the level of demand we ended up seeing. So what ended up occurring is that those deferrals were just sort of rolling off the books pretty orderly without much of a disruption at all. The housing markets, I think at their peak, those deferrals were around 15% of total insured mortgages. As of the most recent data, they're down about 2%. In Victoria, they're even lower. But we haven't seen any real disruption to markets because of those programs ending or those deferrals ending. Big reason why is, again, really a strong policy response. So again, not just central banks that learned lessons from the financial crisis, but governments as well. So we saw a fiscal policy response that was, again, overwhelming and fast. Last time around, the financial crisis, there's all this talk about fiscal stimulus and what programs or what spending they could get out the door quickly. This time around, they just put money in people's bank accounts enormously fast, to the point that in the second quarter, at a time when the Canadian economy was contracting at a 40% annual rate, we actually saw savings across the Canadian economy increase by almost $400 billion. A lot of that, $200 billion from transfers from governments to households. So governments bridging households through this sort of the crisis period from one side to the other, making sure they could still meet all of their financial obligations. A lot of that money ended up not being needed and just ended up in savings accounts. If you look at surveys of what Canadians were intending to do with a lot of that money, it's pay down debt. I think a lot of that money ended up in down payments, and a lot of it just ended up being saved as a precaution. So what we end up with is, despite coming out of a very serious recession, we have levels of financial vulnerability that aren't very concerning. And in fact, most households are in pretty good shape financially. Again, comparing this to the past recession, 2008, 2009, where we saw a huge increase in consumer bankruptcies, huge increase in mortgage defaults. This time around, we're at near record low consumer bankruptcies, and mortgage arrears have ticked a little higher, but are still not near concerning levels and are actually probably going to trend a little bit lower as home prices rise and people really don't need to default, they can just sell. So not only did we not get a big flood of listings from the deferral cliff, we're actually at a level of listings that is pretty close to a historical low. So we've got a market where demand is, as Kim was saying, demand's really strong, and it's hitting a market that's really undersupplied. As a result, we have home prices rising at pretty strong year-over-year rates, with, as Kim was mentioning, single detached leading the way. There's this real flight to space all across BC housing markets for obvious reasons. If people we've been in a pandemic for quite some time, people want space to work remotely, maybe a home office, they want a yard for socially distanced entertaining with friends and family. And that's really driving people to want single detached homes, and especially in places like the Okanagan, where you can get a lot more for your money, especially if you're coming from the Lower Mainland. Maybe you can get an acreage, maybe you can get a lot of space versus what you could find in the Lower Mainland. So not just in the Okanagan, Vancouver Island seeing this as well, places where you can kind of retreat kind of as a refuge. Kim was mentioning as well, accelerated retirement plans. Maybe you're planning to move to the Okanagan anyway, and you just push it up a few years. So that sets the stage for 2021. We finished 2020 with listings that are 30% below normal. We have sales that are about 40% above normal, and a level of inventory that's about 55% below what we would need to see markets in balance. So when we say balance, we mean markets where prices are growing kind of in line with inflation. When we're at these levels, we haven't been at them very much. You can see on that scatter plot, which kind of plots all of the historical data for year-over-year change in price versus market conditions. We don't get here very often at this level of market tightness, but it tends to mean double-digit increases in prices. I think that's what we're going to be seeing, at least in some market types, for the first few months of 2021, until we can get some supply coming back online. So that's 2020. We leave that fiery wreck behind us, looking somewhat haggard, like George Clooney, perhaps not looking his best here. He's been through something like we have, but looking to the future, with some optimism. Why should we be optimistic about 2021? Number one, vaccines. The thing we've been waiting what seems like a decade for, but it's really only been about a year now. We have effective vaccines. They're right now being injected into arms all around the world. And number two, I think we're about to see a real consumption boom across the economy. Three, strong trade and immigration for the province. Four, major capital projects, which were a big part of the economic growth story for BC pre-COVID. And five, what's going to happen with interest rates over the next couple of years. So we'll take each of these in turn. First, vaccines. So we have I think a not as aggressive as most people would like immunization plan with targets to have everyone immunized by the end of September. I think there's going to be a lot of political pressure, and you're already seeing political and media pressure to really ramp up those immunizations. Hopefully we get other vaccines approved that can really speed up a lot of the current targets. Right now, Canada's at about 2% of vaccines, vaccine doses given. BC is about 2.3%. Clearly, these numbers need to be a lot higher, but we can kind of, if we look at projections from epidemiologists, we can kind of see the end of the pandemic. So if you look at those projections, we're expecting things to start to really, the number of daily deaths just really start declining towards the spring. And we're going to get to a point, I'm thinking, where if we recall back to the summer where we're at near 0 cases and everything looked great before the second wave, getting back to that level, but with the added optimism that we're going to have vaccines, we're going to finally get the pandemic behind us, get the number of cases to 0, and that's going to unleash an enormous amount of optimism across the economy, a ton of confidence in the economy, and a lot of that will naturally flood to the housing market and into consumption. So all that optimism, I think, is going to unleash an enormous amount of spending. We're already seeing this right now. If we look at retail sales in the province, the last few months, we've seen year-over-year growth of 10, 11%. And that's just comparing to like November 2019. So we're not even comparing to pandemic levels of spending. We're just seeing an overall really strong level of retail spending. A lot of that is in interest rate sensitive sectors like new car sales. But a lot of it too is just the fact that people have been sitting around in their homes for the past year and noticing a lot of deficiencies and a lot of things they'd like to change. So we're seeing a lot of money being spent on renovations, a lot of money spent on new furniture or appliances, a lot of that savings that we were seeing really starting to be employed in the economy, to especially to kind of fix up things around people's homes. So there is an unprecedented level of savings we touched on due to government transfers and precautionary savings. Second quarter of this year, we saw a 30% savings rate across Canada, the highest on record. In the third quarter, it was still around 17%. Normal is like under 5%. So clearly a huge amount of savings, and a lot of it is just sitting in personal deposits across Canadian banks. So when we kind of look at the trend of personal deposits pre-pandemic, there's about $75 billion in excess savings just sitting on the sidelines waiting to be spent. I think really the optimism around vaccines is going to be the trigger to really unleash a lot of that spending. So we're expecting household consumption growth to be on the order of 5 or 6% in 2021. Number 3, so clearly the domestic side of the economy is going to be doing very well. What about, BC is obviously an export-oriented economy. What about that side of it? Again, I think because of just rationality returning to global trade markets, I'll let you fill in the blanks on why that rationality is returning, but it has to do with an end to needless trade wars, needless tariffs, and then as our export markets start to recover, that'll again give a real jolt. We're seeing the same kind of savings trends all around the world. All that means, those economies are really going to be spending, and that should really give a boost to BC export markets as well. And then on the immigration side, our borders have been closed this year. Population growth has slowed since immigration is the biggest driver of population growth in the province. And then we have these much higher immigration targets in 2021, 2022, 2023. The feds are targeting over 400,000 new immigrants in each of those years. BC tends to get about 15% of that target. So we're expecting really strong immigration once borders open. So perhaps this is a later 2021, kind of 2022 issue, but clearly stronger immigration, stronger population growth, big driver of housing markets, one more kind of tailwind to add to demand. And then finally on the global factors, tourism is going to rebound. This is a big issue in the Okanagan, of course, but everyone in this room is probably can't wait to get on a plane and go on a vacation outside of the country, outside the province. There are just as many people around the world who want to come to Vancouver, want to come to Kelowna, and so once we see borders open, tourism start to pick back up. That's about an $8 billion industry in BC, about 3% of GDP. That's one more piece of the puzzle that will spur really strong economic growth. Number 4, major projects. So in 2019, this was kind of the big story for the BC economy, was we were going to have LNG projects and enormous amounts of capital spending occurring all across mostly the north. And that was going to give a huge jolt to the BC economy. If we look at what happened in 2019, about 20% increase in capital spending in the BC economy. That was about 2% of our 2.7% growth in 2019. So in that year, about 2/3 or more of our economic growth came from just those major projects. A lot of those projects, of course, had to be tools down in 2020 due to the pandemic, but are now ramping up that spending again. So we're expecting a similar impulse to growth in 2021 as those projects get back underway. Add up all of those things, consumption boom, export markets recovering, huge growth in capital expenditures, and we're expecting something on the order of about 5% growth in the BC economy this year. That'd be the best in a couple of decades. Finally, the biggest reason for optimism, I think, interest rates. So right now you can borrow for 1.8%. If you think about inflation over the next 5 years at around the Bank of Canada's target of 2%, that means you can borrow in negative real rate territory, effectively free money for the next 5 years. And it looks like those rates are going to be around for quite some time. Bank of Canada has already reiterated its forward guidance that it's planning to keep its overnight rate low until 2023, or keep it at its effective lower bound until 2023. Even if you run some simulations where we have a much faster recovery, we would still only get perhaps some upward pressure, or perhaps the Bank of Canada reneging on that promise by the end of 2022, which isn't going to happen. They've already been pretty emphatic. They're keeping their rate low until 2023, when they project the upward gap will be absorbed. What about negative rates? I always get this question, so I'll throw in a slide. Bank of Canada's already said multiple times that while negative rates are in their toolkit, they're kind of at the bottom in the toolkit, and they're not something they're really interested in using. And there's an emerging literature that they're not really that effective in terms of spurring loan growth across the economy. So generally, negative rates, it seems like, are kind of disruptive to commercial banking. And so the Bank of Canada has put that particular unconventional policy pretty far down on its list of things to try, but they are continuing to do quantitative easing. So once again, swapping interest reserves on Bank of Canada reserves for Government of Canada securities. They're doing that in a huge volume, about $4 billion of Government of Canada bonds purchased each week, mostly around the 5-year duration, which really drives down key rates for mortgage rates, which means, as long as that they don't taper those bond purchases, which they've kind of signaled that they're not looking to do until the recovery is well underway, that means mortgage rates are going to stay at very low levels for quite some time, with maybe a little upward pressure on 5-year fixed rates towards the latter half of 2022. All right, so to summarize, economy is going to be running on all cylinders. All that pent-up savings unleashed as the pandemic ends, immigration normalizing to higher targets, mortgage rates are going to be low for a very long time to come, and all that strong demand is hitting record low supply. There is some historical precedent for this. The last time mortgage rates were at record lows, we saw record levels of home sales in the Okanagan, reaching, this is a combined, now the Association of Interior Realtors region, combined record, almost 13,000 sales in 2016. So clearly some historical precedent. And on the pricing side, we look across the province, and this comes from some work we're going to hopefully release in the next month or so, but really trying to decompose where pressure is coming from on average prices in BC into a few different shocks or different directions for pressure. This looks a lot, what we're seeing right now looks a lot like that 2015 to 2016 period, where we have very low levels of supply, really low mortgage rates, and this time around, probably even more demand side pressures as the economy really starts to accelerate. So I think we're going to see some very strong pricing over the next year. So our forecast, we're expecting about 10% increase in sales this year. Not quite to a record 2021, but we certainly could get there if we have a really strong spring season. I imagine we're already off to a good start. And then a bit of a pullback, just a still high, but slightly lower levels in 2022. So looking a lot like that 2015-2017 season, with sort of 2021 playing the role of 2016. MLS average price, we're expecting up about 9% in 2021. We might see, I think a lot of that is going to be really still weighted towards single family homes, which could see much faster price appreciation if we're still seeing a lot of that demand for space, which I expect we will. If you liked anything you heard here, you can find a lot of what I talked about on our website, our forecasts, our nowcasts, our reopening dashboard, anything you might be interested in, our periodical market intelligence. And with that, I think we have time for questions.
Great. Thanks very much, Brendon. One thing that came to mind as you were presenting, we're going to bring you back. We love chief economists. I don't care where they're from, and you've just reinforced that. And we've got some comments. Appreciate the scope and scale of the data that you covered in the time that we had together. I do respect those that have gathered here. We will go 10, 15 minutes with questions. And those, Jane and Bill and Kim, feel free to jump in if you have questions along the way. Let's get this rolling here. I do want to, Brendon, flag something that was raised in the chat with respect to commercial. What we're seeing in the short term and long term, and how the pandemic, and quite often you have anecdotal conversations of people working from home. Okay, that's impacting the residential side. What's the impact that we're seeing on the commercial side? And do you anticipate the impacts being short-term, long-term, and are we any different in the Okanagan as compared to the coast? Can you comment on that?
Yeah, I think the short-term impact, especially when it comes to things like small businesses and small retail, are really obviously feeling this a lot, and we see that in the job numbers. And so I'm hoping that's more of a short-term impact. It's always hard, especially with the small business owners who, have kind of everything on the line. And so if you look at data, and it's like, well, this stat, a couple of numbers replace these numbers, but it's not the same people. So you have to kind of remember, like, this is really hard on people and not just looking at the data. So even if look at business bankruptcies, and they're not that high, surprising so far, but those are still people with their kind of life savings on the line. So that's the worst part of the impact on the commercial side. Long term, it's so uncertain how much have we accelerated trends because of the pandemic? Like, are people going to be working remotely for a lot longer, and therefore we don't need as much office space? I don't know. That question's totally unsettled. I know for me, I like being at home with my cats, but not this much. My wife's at work, my kids are at school. I'm just kind of wander around the house on my own. I kind of wouldn't mind being back in an office every once in a while. So we'll see how prevailing those trends are and what we see after this. But I think it's way too early to tell. Retail too. I don't know. I'm not really much of a shopper anyway, but I would hope that people are just wanting to kind of get back out into public and see other people. I don't know. That seems like an attractive thing to me. So, but I think it's really too early to tell. Kim, do you have any insights on the local market?
The commercial side, Kim?
Yeah, I was just going to add, from the people that I have talked to across the country, it is a concern across the country about the commercial market, because that is where the small businesses, what Brendon was talking about, that's who that's going to be affecting. I'm not sure if it's going to be the big commercial buildings, but that is definitely something that everybody is watching. And I know the commercial realtors that work, I don't work commercial, so I don't have a lot of detailed information, but the commercial realtors within Kelowna that do this, I think they were all watching it very closely. And again, it's something that we can't predict, and we're just going to have to watch it. But it is a huge concern.
Are we seeing an impact, as noted, on the commercial valuation? Many of us that even in businesses, we've got our assessment notices, but there's a lag time even with assessments. Are you seeing an impact on the commercial side valuation?
Yeah. Commercial is an interesting thing because it's all very closely held by commercial brokerages. So we don't really see a lot of that data. You really have to ask someone who works in that space. We just don't see it.
Yeah, and we'll certainly reach out to some of the local contacts that we have and anecdotal. And I think one of the things that strikes me too, when there's uncertainty, there's hesitance for investment. So greater clarity in particular areas. And I think the vaccine, as you noted, Brendon, is one of them. We see some light at the end. Consumer confidence starts to increase, and then that has an impact on the market. We do have some questions as well, and feel free, those that have joined us, to use the Q&A function, or as at least Warren has, you can use the chat function as well. So one of the questions we have, and to both Kim and Brendon and others, if you want to make a comment, the government responded quickly, as you mentioned. I think the wage subsidy program specifically, even from our perspective, The world would be vastly different if the federal government did not act quickly on the wage subsidy program and on CERB, helping some of those that were not in the workforce or had to leave the workforce shortly thereafter. But there is a sunset that ends. Are you seeing an impact? Currently, the federal government says in summer. Are you starting to see or would expect some impacts to the market if that government program isn't followed up by either an extension or some sort of reduction over time? Is there likely an impact there, do you think?
Yeah, I mean, I think the purpose of that program is to bridge households through financial difficulties. So it's not meant to be a program that's going to be ongoing. The hope would be that by the time we end it, we're at a normal but probably still elevated level of unemployment, but therefore our normal social safety net can take over with programs like employment insurance. So we have programs to deal with unemployment. It's just that we didn't have programs that could deal with unemployment on this scale, and also during a pandemic where you really want to pay people to stay home so they don't spread a virus, right? So that's an extraordinary kind of one-time spending that we'll hand off to our normal ways of handling unemployment once the pandemic is over.
I have a question with respect to the Alberta economy and the effect, because we are certainly integrated in our economic conditions and connected with investment from Alberta, particularly around secondary properties. Though we are also conscious in Kelowna and West Kelowna, we're subject to the speculation and vacancy tax. I may get a question in on that in a moment to you, but the question we have is with respect to the Alberta economy, are we seeing an impact on the Okanagan?
So I will add to this one. I've seen a lot of people relocate from Alberta because of what's happening in Alberta and their economy. So not necessarily buying a secondary home, but I've seen, or at least the people that I'm talking to, they're relocating here due to work. And then they've also sold some secondary homes in this area due to the pandemic. So it definitely has an impact on us. I'm not exactly sure what the long-term impact is going to be, but and I think with the economy and the pipeline and all that kind of stuff that Alberta is going to be dealing with in the future, I'm not sure how it's going to play out, but that's what I've seen in my own personal business.
Are those buyers? Sorry, Brendon, go ahead.
Yeah, no, on the Alberta issue, it's kind of interesting. I think usually, I think out of Alberta buyers are about 10 to 15% of Okanagan buying, at least what used to be OMRAD buying. But I think it's from two sides. Like when the economy is doing really well, when oil prices were really high, you probably saw a lot of buying of rec properties and second properties. The impact you get when the Alberta economy is not doing well is that you get the migration from Alberta to BC, because you can usually predict that really well just by differences in unemployment rates in the two provinces. Tends to predict that migration pretty well. So when the Alberta economy is not doing well, we get Albertans. When the Alberta economy is doing well, we get Albertans. So I think in general that relationship is there. It's kind of which side it's coming from generally. I mean, I think maybe it's right now we're probably getting a lot more of in migration from people looking to really live in the Okanagan versus have a second home.
Yeah.
So recently there's been some increased attention on the speculation and vacancy tax. The government revealed, I think, 88 million. It collected a few of those million out of Kelowna and West Kelowna. The policy was put in place to have an impact on affordable housing. I don't know if the association has a position on a speculation and vacancy tax that is geographically landlocked to Kelowna and West Kelowna. But are you seeing anything in the market that's impacting that? So there was some concern early on it would actually have the effect of driving other investment to some of the other communities, and the Okanagan becomes much like the Lower Mainland. You just drive until you qualify.
Yeah, so I'll answer in the way an economist would, and then Kim can tell you what's going on the ground, people she talks to. So I think we are the only people who have never, at this point, have actually done any quantitative research about the spec tax and its impact. So we did a study last year, kind of treating it almost as a natural experiment, because there's some regions very close together where one has the tax and the other doesn't, right? So you should be able to kind of analyze their trends. What we found across BC, comparing all markets and separating them into two groups, kind of a spec tax group and a non-spec tax group, is that the spec tax group had sales fall by about 12% more than than non-spec tax regions. Price growth was about 5% slower in spec tax regions versus non-spec tax regions. Now, if you do that analysis and exclude Metro Vancouver, all those impacts are no longer statistically significant, which would say maybe not as much of an impact. If you do something like compare Penticton and Kelowna, their performance looks really similar, even though one has a spec tax and one doesn't. But when I talk to realtors, they bring it up a lot. So obviously it's a problem that's not in the data, where like they hear from buyers, like, I don't want to pay the spec tax, or I'm hearing the spec tax is having a real negative impact. So when we do kind of econometrics around it, hard to see, but I do hear about it on the ground a lot from realtors. So maybe Kim, you could fill in.
Yeah, that's what happened in the beginning when the spec tax and those taxes came in, is it put a lot of fear into the buyers. So the buyers were like, okay, well, what's going to happen? Is this tax only going to be Kelowna, West Kelowna? Is it going to go across the whole province? We didn't know what the government was going to do. So everybody had those concerns. So anybody who was considering buying in Kelowna, West Kelowna, now all of a sudden was considering, well, let's look at things just outside of those areas so we don't have to worry about the spec tax. But it actually paused a little bit of the buying at the beginning. I think it's kind of rolled out. When I talked to my colleagues in Kelowna, a lot of them had the same experience, where they saw a little bit of a blip in sales at the very beginning, which I think was in 2018-ish, right? So that's where they saw that little bit of a dip in people being concerned about the spec tax and what it would do. But it's kind of worked its way out a little bit now.
And one of the things, we certainly have our own position, and we've provided that and support both the mayors of West Kelowna and Kelowna in their opposition to this. One of the things that we've suggested, one of the indicators is, did it drive an increase in more rental properties? And I think, Kim, you're probably well aware with these properties that they're talking about are mostly fellow Canadians, not foreign buyers in the Okanagan. And they didn't convert. They got out of the market, if they got out of it at all. They sold it to somebody else. They didn't make it all of a sudden available to rentals.
And that was another one too, right? So if you combine the Alberta recreational home with the spec tax, those are some of the sellers that said, okay, that's it. I'm not paying this spec tax. I'm selling, and I'm going back to Alberta, and I'm selling their recreational properties. So that was a little bit of a combination of both of those issues.
A couple more questions. I call this the speed round as we wrap up in the next 5 minutes or so. One of the things, Brendon, that you noted of the impact, and one of the things that even from our analysis perspective, what are reactionary and what is the trend that we saw forthcoming? And then the aging demographics in Canada is driving a lot of change right across the country. We're no exception. A lot of those lower mainlanders, they drove up the price much more than foreign buyers because they were coming up to the Okanagan. Has this, in your mind, accelerated a trend or just the continuation of a trend that we were likely to see anyways, of more of that because of the demographic shift? Is that what I'm hearing from you?
Yeah, long term, you can't fight demographics. In the next 5 to 10 years, we not only, and for places like Kelowna especially, we not only have millennials who you kind of still think of as teenagers, but are actually like 30-year-old people, entering their first time, home ownership years and their prime earning years. They're all, going to be in the market. And then you have retirees. So you look at Kelowna, it's got this bimodal kind of cohorts where you have this huge wave of millennials that are going to be in the market at one point, and another big wave of baby boomers that are retiring and maybe looking to come to Kelowna. So it's a lot of demand from demographics. And when you have those demographic demands in markets that are really undersupplied in terms of listings, especially, you're going to get accelerating prices. So a lot of that is kind of baked in to what, if you're not going to have enough supply to meet those demographic demands, you're going to get upward pressure on prices. We're seeing that all around the province.
Is there a bit of a dichotomy? I wonder if you could comment, Brendon, with respect to, you talk about the inventory that people are looking for and that single family and the demographic shift. And then you have many local governments, watching their costs and saying increased densification, affordable housing, rental units. But we have a market, and if people respond, and if you give time, the private sector will respond to market forces and influences. But in fact, maybe the demand isn't, the dynamics of, that increased density isn't there to encourage investment for construction of affordable housing, unless it's government subsidized, given the trend seems to be, I'm going to go as far as I have to, whether it's in the north or south Okanagan, to get that single family, and then I'll just be dependent on the vehicle. It's kind of a bit of a dichotomy. Yeah. We want increased density, and yet all the factors are leading to something other than that.
Yeah, it really depends on your market. So like, Vancouver is zoned to be mostly single family when it shouldn't be. And that's what prices are telling us. When you've got single family homes that are millions and millions of dollars, that means that land could be used in a lot more efficient way, right? That doesn't necessarily always hold for other markets. Kelowna is a really growing city, though, and maybe it does need more density, but maybe there needs to be a mix. But I don't know. I'm not as familiar with zoning in Kelowna as I am in Vancouver. But sometimes you have market forces that are sending a pretty strong signal of what should be done with that land, but governments get in the way of what should be happening.
Yeah, we had some discussion with auto sales. People have increased because I tell you, you're safe in an automobile, and in the Okanagan, we're still dependent on automobiles just by habit. So, do people go back to transit afterwards? That's one of those unknowns. Or now are we more even addicted to the vehicles and making those treks like the Lower Mainland, right? So, yeah, exactly. A couple of quick questions, Brendon. Outlook for the Canadian dollar as we wrap up.
Not something I spend a lot of time talking about. I think generally, it is part of we run Canadian macro models, and so it's part of that. Generally, I've got it around 80 cents with kind of a range of 75 to 85, but it's really hard to exchange rates are the most difficult thing to forecast in almost all of finance and economics. So that's a guess. Treat that as a guess.
Another question we have similar to that, and it's always great to have a chief economist. Inflation. How long before it rears its ugly head?
I'm not very concerned about higher inflation. We have very low inflation right now because there's so much slack in the economy. Generally, if you just say you just chart CPI over the last since inflation targeting started in 1995, pretty good at keeping inflation at 2%, and usually it's actually a little under. Bank of Canada sometimes has trouble hitting that 2% target, and their range is really 1 to 3, and we almost never test that 3% upper bound. So I'm not real concerned about it. I know there's some concern about deficit spending driving prices up, or people concerned or kind of misreading what quantitative easing means for inflation, but it's not something I'm very concerned about. Not to say that quantitative easing has inflationary impacts on asset prices. So you see what happens in the stock market, bond markets, housing markets. That's where the inflation, I think, is what we're seeing, is because when you drive interest rates this low, we tend to see a real jump in asset prices. So we are seeing it there.
Excellent. You've been really gracious with your time. We're going to wrap things up. I'm going to go to Jane in a moment, but I'm respectful of those that participate. We did have one more question, Kim, for you with respect to the market share over time, the Alberta versus other buyers. I know traditionally it's, I think Brendon even mentioned, 10 to 15% of Albertans or other Canadians. And then 1%, I think, in the Okanagan is about, or less than that, of foreign buyers. Has that changed to be seen, or are those trend lines continuing? That percentage of sales.
Yeah, so it's really hard to manage buyers because not all realtors report who their buyers are, and as an association, we don't have a lot of those numbers. However, some do. So we have seen an influx come from the lower mainland and outside of Alberta. So we have seen, but the majority of the buyers within the Okanagan and the association is still people that are from here. So they're just moving around within our organization. So
we've sort of seen a bit of a swap too between, it used to be Albertans were 15% and lower mainland was like 8%, and now it's like swapped.
Sweeps.
Right.
Yeah.
So like lower mainland's like 15 and Alberta's like 10.
Yeah. We've had a lot of people come from up from the lower mainland. Yeah.
We won't get into any discussion about additional tax for anybody from the lower mainland moving up? Or? No.
Lower mainland tax?
Hey,
No.
yeah. Gonna wrap things up. Jane Otterstrom from our sponsor today to provide thank you from. Thanks, Jane, for joining us.
Yeah. Absolutely. It's my pleasure to acknowledge and thank the guest speakers today. I know I learned a lot. I hope everyone else did as well. That was amazing. So on behalf of the Kelowna Chamber and all those who have joined us online today, thank you all for taking time out of your busy schedules to speak with us. Some years ago, we shifted from providing a speaker gift, and instead we'll be making a small donation to a local charity on your behalf. So this month's benefactor is the Launch Community Development Foundation. So thanks a lot so much. Bye, guys.
Awesome.
Thanks, Jane.
That was a lot of fun.
Yeah, and thanks to Touchstone Law. Say hi to Una for us. Thanks, a great chamber partner, former director. Thanks, Jane, for joining us from Touchstone Law. And just so you know, the designated charity is focused on financial literacy. So really want to thank that worthwhile organization. We'll make a small donation on behalf of our guest speakers. So want to thank you, Bill. Thanks again for joining us. Again, this has been recorded. We'll be posting it on our YouTube channel shortly. We'll let everybody that participated know as well. Please share through your social media. I want to thank you all for joining us today, and we look forward to Kim and Brendon bringing you back a little bit and getting a sense of where we are in the real estate market. Thanks very much for joining us today, everyone.
Thanks, guys.
Thanks for having me.